now, early in the morning, I'm gonna share I'm gonna share a little golden nugget. Okay, I'm gonna share a little golden nugget. So, schematics that are actually stronger than your usual schematics, and that I truly have a lot of confidence in. Also, sharing with you guys and just overall taking those setups, doesn't matter on which time frame. It's actually the setups where on the lower time frame, I'm gonna draw it right here because you guys can see it work again. Actually, on the lower time frame, if you already have a valid 3-tap, right? If you on the lower time frame already have a valid 3-tap like this, A1, A2, A3, but if you zoom out on the higher time frame, this merges into one tap like this, where these two taps on the lower time frame present one tap and one deviation on the higher time frame, like this. And then you leave behind demand, let's say in here, which corresponds or correlates to the same demand, but then presented like this. If price then comes back, right? If price comes back right here, and you get that reconfirmation, and you can enter on that breakup structure, that means that on the red, which represents the higher time frame, this simply looks like a model 2 accumulation where you can go long on that breakup structure, put the stop loss below the third tap, target the range high. Whereas if you actually zoom in, it's an extended model right here where you already had a 1, 2, 3, and this is just a demand mitigation, okay? Kind of making it as a 4-tap. Like this. Like these low time frame models are actually very good, and it doesn't matter on which time frame this presents, but overall, if you have an extended model on the lower time frame, which is one model on the higher time frame, is actually very nice. And if you're trading it on a lower time frame, oftentimes you can also de-risk very fast because the breakup structures here are very small. You know, you can enter here and the stop loss can be here and you can be de-risked. So correlating and translating that into this Pepe example, if you go on the 2-minute time frame, right? Right here, what you can see on the 2-minute time frame is what I present to you right here in black, where you have your 1, you have your 2, and you have your 3, and then you already have that demand mitigation. And here on the lower time frame, you already broke structure, and you can actually see that you had a pretty decent return to zone coming into that point. It's already a model 2 accumulation. Okay, it's already a valid model 2 on the 2-minute. But if you zoom out on the 5, where the range is still valid on, based on the 6 candle rule and the deviations, this merges into one tap. These are not valid a 2-tap and a 3-tap because you don't have that 2 candle push up before the 2 candle down before the up again, right? So on the 5-minute, this merges into one tap right here. And then on the 5-minute, you have your extreme demand, which will be right here. Yes, it's tiny, slightly mitigated right there, but I always tell you guys that if you have only that demand and it's mitigated, but it's the only demand that there is, you can pull it below that mitigation and still use that, right? So on the 5-minute, which is now black or represented here in red, you have a model 2 like this, but on the lower time frame, it's actually an extended model. So that's why that would make this entry right here so much better. And then that will be your long. Stop loss below the low. That will be your target, 2.7 RR. The moment you get the retest and you get the reconfirmation, you trail your stop loss from a 0.26 to around a 0.13. So you're only risking 0.5%. And it would have been better if you could have traded it in, a more advanced context where it's actually a proper model. Because every time you're trading these lower time frame models, it's a bit riskier. But overall, if this was a very good high probability model where the target was right here, that's 100% a trade. But just this tiny little thing where you kind of have this tap in between that confirms the lower time frame model and just creates the demand of the higher time frame model like this is actually very nice. It's a very strong setup.